What's happening? I'm JC with the Agajanian Group at Whissel Realty, and today we are talking about the rising interest rates and how they're going to affect our local housing market. Unless you've been hiding under a rock, I'm sure you're well aware of the significant changes in the monetary policy by our Fed Funds Reserve and how that's trickling down and affecting our local mortgage rates, and most importantly in our 30-year fixed mortgage rates. So what does that mean to you? Is it all negative? Are there actually some positives? The answer is yes. We've got a couple good positive points about what is happening in the market right now for you. And of course, we're going to share with you some of the negatives that you may be aware of already. So let's dive into it. So first, let's talk about the positive things that are happening with rising interest rates right now. I know it sounds counterintuitive, but to be honest with you, there are a couple good points about this. First of all, we're going to have less buyers to compete with if you're a buyer right now in the market. Whether it is actual circumstances because of maybe not the strongest qualification, or maybe a little psychological fatigue and people saying, you know what, forget about this. Rates have jumped and the market's too tough to get into. I don't want to do it anyways. Regardless of the reasons why, we are going to see fewer buyers competing with you when you go to look for that property to make your dream home. We're also going to see more inventory. With sellers getting wind of maybe us nearing the peak of this housing boom, a lot of them are going to be motivated to get off the bench and get into the game and put that house on the market. So with fewer buyers to compete with and hopefully more homes to select from, you're going to have a better opportunity as a buyer right now, despite these rising rates, to get that home that you've been looking for. More importantly, you're not going to have to pay the outrageous premium you likely would have just a couple months ago to get that same home. Not only that, there are alternative loan options for you. You are not stuck with a 4 or 5% 30-year fix. There are other safe, conservative things you can do to get yourself a better rate as well. So overall, some good pieces of information to help with the inventory, to decrease the competition, and help you get that home you want. Of course, there's some negatives that come with these rising rates, and that's the news that has been focused on with the mainstream media, of course, right? Because negative information sells. But you are going to have less purchasing power. That's a big one than you had as little as a couple months ago. We've got rates that have jumped nearly 2 full % in a short period of time. In fact, depending on your price point, you may have lost maybe $50, $100, $150, or even more $1,000 to your maximum home budget. So that stinks. There's another negative that comes with these increasing interest rates, which is higher monthly payments. That's kind of self-explanatory. And as I mentioned in the market update that I recorded recently, you can go check that out. You'll see that there are ways we can mitigate that. Overall, we need to ask, are these negatives going to outweigh the positives that I just mentioned a minute ago? Well, I think the answer is no. The main reason these negatives don't outweigh the positives is because we're still going to continue to see market appreciation go up throughout this year based on the data that we're collecting from the Association of Realtors each month. And there's also a little bit of malleability with your actual financing situation. We can massage the numbers to make it more comfortable for you to still get into that home that you love. Finally, you're always going to be able to adjust your mortgage payment. People will refinance down the road. You can change your personal finance situations, but you can never go back and change the price at which you purchased your home. So if you lock that in now, things are going to continue to go up. In the future, if they plateau or pull back a little bit, you're still going to be locked in at this purchasing price. But if rates drop again, you're going to be able to refinance and actually move that payment down, but you can never move down that initial purchase price that you had in the beginning. All in all, the market is still very strong. We are still in a seller's market, but like I said, we're having fewer competition now for our buyers, and it's a great time to take action if you haven't yet. I'd love to chat with you. Send me a message, and I'll talk to you soon.